Okay, our next problem is PR22-1A, and this is the first of the problems that you'll see on your written final, your proctored final exam. So you will want to practice these on paper as we go along. It's PR22-1A on page 1065, and let's read through it. What we're doing here, you guys, essentially is setting some type of standard cost for direct materials and a standard usage for direct materials. Then at the end of the month, we'll know the actual price we paid for the direct materials and the actual quantity used. And then we'll determine variances from the standards. Did we do better than the standard or beat the standard, or did we not hit that standard mark and performed at a level less than standard? We'll do the same thing for direct materials. We'll determine the standard labor rate. We'll do the same thing for direct labor. We'll determine a standard rate per hour. We'll compare that to the actual rate we paid per hour. Determine a variance there, either positive or negative. We'll call those variances favorable or unfavorable. And then we'll also determine a direct labor time variance. Compare the actual direct labor hours versus what we had budgeted or our standard direct labor hours, and determine a variance there. Now, this was the system used by almost all manufacturers for a number of years. There are some methods of evaluating a production facility that are a little better thought of, maybe a little newer than standard cost. There are some problems inherent in setting standards and comparing actual results with those standards. If you think about it for just a second, you'll probably determine what the issues are. If you don't update your standards really often, then you can compare actual to standards and not get valid information. Meaning the standard price for our raw materials could change really often. And if we don't update that standard price, our purchasing department might be doing really well getting quality materials for us at the lowest possible price, and we think they're paying a price that's way too high because we didn't update our standard like we should have. These can also sometimes point you in the wrong direction. We'll talk about that a little bit more after we go through the problem, but let's read it first. It's Fancy Fixture Company, manufactures faucets in a small manufacturing facility. The faucets are made from brass. Manufacturing has 100 employees. Each employee presently provides 40 hours of labor per week. Information about a production week is as follows. Okay, and they give us standard wage per hour, standard labor time per faucet, standard number of pounds of brass, and that's going to be per faucet as well, standard price per pound of brass, actual price per pound of brass, actual pounds of brass used during the week, number of faucets produced during the week, the actual wage rate per hour, and the actual hours for the week. Given all of that information, they want us to determine on A, the standard cost per unit for direct materials and direct labor. I'll set that up here as standard cost per faucet. They say per unit, but it's really, here we're producing faucets, so I'll put standard cost per faucet. Okay, for direct materials, we're going to say standard number of pounds of brass per unit, per faucet, times standard price per pound of brass. Okay, and that's going to be equal to, what do they say? Standard number of pounds of brass per faucet. They just say standard number of pounds of brass. It is per faucet. That's 5 pounds. So 5 pounds times, oh, I hate that going capital. Ah, it keeps doing it. Okay. It's driving me crazy. Okay, I'll just do it like this. This means multiply as well. 5 pounds times the price per pound. I don't know why I kept doing that. I guess I thought eventually it was going to be a small stay at a small x. Anyway, 5 pounds times $2.80 per pound is our cost. Okay, so we're going to put that out here, equals 5 times 280, that's 14. Okay, now we want standard cost per faucet when it comes to direct labor. Okay, so here we'll take our formula here, standard number of hours per faucet. Well, it's actually standard labor time per faucet, 20 minutes. So that's 1/3 of an hour. Okay, so it's going to be 1 divided by 3, or 1/3 of an hour. Times our standard wage rate per hour. And you guys hope that makes sense. Of course, 20 minutes is 1/3 of an hour times $21 per hour. I hope that makes sense. We make essentially we're making 3 faucets per hour. So of course our labor cost, if it's $21 per hour, would be $7 per faucet. Or we could say the 1 divided by 3 times our $21. And that's 7. Okay, so when we sum the two, we get set $21 as the standard cost per faucet with regard to direct materials and direct labor. So that takes care of A. Okay, let's go to B, our direct materials cost variance. That's what they want next. Well, there's 2 components there. The first component is direct materials price variance. So we take the difference in the actual price and the standard price and multiply by the actual quantity. Okay, well you guys, I make my formulas a little bit different than in the book. I don't try to use positives or negatives here. I just make this one always come out to a positive. And then I decide whether it was favorable or unfavorable by looking at the 2 numbers. Okay, if our actual price is high, what we actually paid for direct materials is higher than the standard or budget, then that variance is unfavorable, right? But if our actual price paid is less than the standard price or the budgeted price, then that variance would be favorable, right? We beat the standard. Okay, so let's see what we've got here. Our direct materials price variance. Our standard price per pound of brass is $2.80. Our actual price per pound of brass is $2.72. Actual price is less than the budgeted or standard price. So we know before we even get started, we want to mark all these as F or U, or U or F. This one is going to be favorable, right? Now let's think about why. Because our actual price per pound of brass, $2.72, is less than the standard price per pound of brass, what we expected to pay, or our budgeted price. So what we actually paid is less than our budgeted or estimated price. So this variance is going to be favorable. It worked out in our favor, right? We paid $2.72 when we expected to pay $2.80 per pound. Okay, so here you're going to have $2.80 minus $2.72, and we're going to multiply by the actual quantity, the actual pounds used, actual pounds of brass used during the week, 59,875 pounds. Okay, and we know this one's going to, like I said, I always make this part come out positive so that doesn't confuse me. I just look and see, is our actual price lower than the standard? If so, like in this case, it's going to be favorable. If not, it's going to be unfavorable. Okay, so here we've got, what is that, 0.08 or 8 cents out of here times 59,875. Okay, next we'll do the direct materials quantity variance. Well, first we'll take the difference in the actual quantity and the standard quantity. Okay. They give us the actual quantity, 59,875 pounds. The standard quantity, they tell us standard number of pounds of brass per faucet, and they tell us how many we produced this week. So to come up with the standard quantity, we'll have to make a little side calculation here. Our standard quantity is equal to let's move this down a row. Alright, and we'll bring it out here. Our standard quantity would be equal to standard number of pounds of brass per faucet is 5 pounds times standard price per pound of brass is $2.80. It's your 14, same as up here. You guys probably noticed I did that one incorrectly. We're looking for the standard quantity here. Let's make that over here. Okay, standard quantity equals 5 pounds of brass per faucet. How many faucets did we produce this week is what we need to multiply by, not the cost per pound of brass. Number of faucets produced during the week, 11,820. Okay, and that should not be a dollar amount. 59,100 is the standard quantity of faucets produced. How many did we actually produce? Our standard quantity of pounds of brass used for this level of production. Okay, we want to take the difference in the actual quantity and the standard quantity. Well, the actual quantity was 59,875 pounds. The standard quantity was 59,100 pounds for this level of production. So you guys, we expected to use 59,100 pounds. Instead, though, what did we use? 59,875 pounds. Okay. So we're going to say 59,875 minus the 59,100. And then we're going to multiply by the standard price per pound. That's $2.80. Okay, so what do we come up with here? Well, first off, we need to know if it was favorable or unfavorable. I think we figured that out already. The standard or the budgeted amount, budgeted number of pounds of brass to be used this month, 59,100. We got that by multiplying 5 pounds of brass per faucet times the 11,820 faucets produced this week. Okay, so we were supposed to use 59,100 pounds, but we used 59,875 pounds. We went over budget in our direct materials usage. So this one's going to be unfavorable. We used more than the budgeted amount, right? So it's going to be equal to 59,875 minus 59,100, and then we're going to multiply by our standard price, $2.80. We get $2,170 dollars unfavorable. Okay, now you guys, we're going to net these together. Our favorable variance, see, our total direct materials cost variance is just the sum of these two. Well, they're different. We have one that's favorable and one that's unfavorable. If they're different, we'll take the difference. If they were the same, we'd add them together. Here the 4790 is larger than the 2170. So we get 2620, and that one is going to be favorable overall because our favorable variance was larger than our unfavorable variance. So the total direct materials cost variance is $2,620, and that's a favorable variance. Now we'll pick back up with direct labor, the direct labor cost variance, and talk about maybe what some of this information tells us a little more in the next video. Thanks a lot.